Welcome to the Explainer. What if you could understand the entire emotional story of a trading day in just a single glance? Well, today, we're decoding a powerful visual tool that lets you do exactly that, the Japanese candlestick. So, what's our game plan? First, we're going to jump into a really cool origin story. Then, we'll break down a single candle to see what makes it tick. After that, we'll learn how to read patterns, which is like learning to read sentences. And finally, we'll put it all together to figure out how to read the market's mood. All right, let's kick things off. But we're not starting on some flashy, modern trading floor with screens everywhere. Nope, we're going way back in time, to the chaotic rice markets of 18th century Japan. It was right there that an idea was born that would change finance forever. I mean, just think about it for a second. How would you even begin to predict which way the market's headed without any computers, without any algorithms, without high-speed data? They needed a way to see not just the price, but the emotions driving that price. So how'd they do it? Well, the answer comes from this absolute genius of a rice trader named Munehisa Homa. See, he had this incredible insight. He realized that the market was driven by human emotion, by fear and greed. So he created candlesticks to actually map that emotional landscape. And this tool he invented, it was so powerful that it's now a fundamental part of every modern trader's toolkit, from stocks to crypto. Okay, so how does this brilliant invention actually work? Let's get right into it and break it all down. We're going to start with the anatomy of just a single candlestick to see the amazing story it can tell. Okay, so think of every single candle like a mini movie of a trading session. It doesn't matter if it's for 1 minute or a whole day, it captures the entire epic battle between the buyers and the sellers. And the crazy part, it tells you all of this with just 4 key pieces of data. And here they are, the 2 fundamental outcomes of that fight. On the left, you've got your green or bullish candle. That's a win for the buyers. The price closed higher than where it started. And on the right, you have the red or bearish candle. That's when the sellers won the day and the price closed lower. So, how do we actually read this story? It's all in the parts. That big, thick part in the middle, we call that the body. It shows you the main event, the range between the opening and closing price. If it's green, the price went up. If it's red, it went down. Simple enough, right? But what about those thin lines sticking out the top and bottom? Yeah, those are the wicks, or sometimes called shadows. And I love this analogy. Think of them as the battle scars from the trading session. They show you the full extent of the fight, just how high the buyers managed to push the price, and just how low the sellers were able to drag it down. They tell you the story of the struggle for control. Okay, so if a single candle is like learning a single word, now we're going to learn how to string those words together to make sentences. This is where things get really interesting, because this is how you start to understand the market's bigger story. And this, right here, is the real secret. Candlesticks aren't just data points on a screen. They are a direct window into market psychology. They're visual proof of the emotional tug-of-war between fear and greed. When you learn to read these patterns, it's almost like you're learning to read the market's mind. All right, let's get into the good stuff. We're going to look at some of the most powerful sentences in the candlestick language. We'll kick things off with 2 classic patterns that basically scream, hey, watch out, the tide might be about to turn. First on our list is a real showstopper. It's called the bullish engulfing pattern. Seriously, you can think of it like a superhero bursting onto the scene. It's this super dramatic 2-candle story that signals a massive shift in power. Just look at that! The big green body on the second day completely swallows the previous day's red body. It just engulfs it. This is not a subtle hint. This is a powerful, decisive statement that the buyers have just overwhelmed the sellers and taken complete charge. And hey, this isn't just a textbook drawing. Here it is in the wild on a real chart for Peugeot stock. You see that long downtrend? The price is just bleeding out, and then bam! That beautiful bullish engulfing pattern pops up, marking the exact bottom before a huge reversal higher. Imagine spotting that in real time. Now, not every reversal is some huge dramatic event. Sometimes the signals are a bit more subtle, but they're just as important. And that's exactly where the piercing line pattern comes in. It's a sign that the buyers are mounting a really serious counterattack. So here's the story it tells. The day starts out looking pretty bad, right? The sellers are still in control. But then, the buyers storm back in. They don't just stop the losses, They managed to push the price more than halfway back up the previous day's red candle. It's like they're planting a flag and saying, "We're back." That's a huge shift in sentiment. Okay, but as we all know, what goes up can definitely come down. For every heroic charge by the buyers, there's a potential ambush by the sellers. So let's flip the script and look at the patterns that warn an uptrend might be running out of gas. So remember that superhero, the bullish engulfing? Well, this is its evil twin, the bearish engulfing pattern. It is just as dramatic and signals a potential market top. Here, a huge red candle completely swallows the prior green candle. It's a crystal clear sign that the sellers have just wrestled control away from the buyers. And check it out in action on this Essilor chart. The stock is flying high, everything looks great, and then, whoa, that massive red candle appears, wiping out the previous day's gains and signaling the start of a new downtrend. Being able to spot a warning sign like that, that's a real game changer. And just like the piercing line is a ray of hope for the buyers, its opposite has a pretty ominous name, the dark cloud cover. After a strong up day, the next session starts off positive, but then the sellers take over, casting a dark cloud over the recent gains. It's a clear warning that the party might be over. Okay, so we've covered a lot of ground. The history, the anatomy of a candle, a few key patterns, but the really big question is, how do we pull all of this together to actually make better decisions? Let's talk about the key principles for reading the market's mood. Now, if you only remember one thing, please make it this. Context is everything. A reversal pattern at the end of a long, powerful trend, that's a huge deal. But that same exact pattern in the middle of a choppy, sideways market, it means pretty much nothing. And always, always remember, these patterns are about probabilities, not crystal balls. The smartest traders don't try to predict, they wait for confirmation and then they act. So there you have it. You're no longer just looking at a price chart. You're reading a story about human emotion, a drama of fear and greed that plays out every single day. The real question is, now that you know the language, what stories will the market tell you?